Hello everyone and welcome to today's video. My name is Jose Ricardo Tejan, editor of the Prosperity Digest newsletter and product specialist at Marketers Daily. Today in the Insider Report, we're looking to discuss what we call the captive insider. This is an insider that for XYZ reason got caught in a position. He still has the position and we want to follow through. We want to know exactly what is happening in that stock and how we can take advantage of it. So today we have a company. There's an opportunity, almost a 32% upside opportunity, up to 45% in the common stock. But also we found a call option play for speculators that can yield between 200 to 300% in your money. As usual, before we continue, remember that all these videos are for educational purposes only. We do not know exactly what is your risk profile or your risk tolerance, and we're not financial advisors. But what we do publish actionable content. We explain strategies, ideas that you can take advantage of, but you always have to measure your own risk. Also, past performance does not constitute future performance. Having said that, let's begin. So I want to talk about the company called Kraft Heinz, the Kraft Heinz company. And sometime in 2015, everything was going well for them. Stock was trading around $72, $69. But suddenly, as usual, as we have explained in other videos, consumer trends tend to change. And big elephants, big companies fail to adapt to that situation. And the Kraft Heinz company was not the exception. So we know the line of products they have. Mayo, Dijon mustard, A1 when you're eating a steak. Who hasn't used it? Delicious. Also Kraft, you have several products. Philadelphia Kraft cheese. Again, who doesn't love Philadelphia Kraft cheese on a toast? I do. I'm pretty sure you do as well. But not everyone. So there's one guy that believed in the company. Of course, you know him, Warren Buffett. He is, in fact, our captive insider. 325 million shares with a current floating loss of 56.77%. Let's just round it to 56. Now, the reason why we're sharing this information with you today is because not only we find that this is the time to take advantage of this position. On 1 week they had a drop of almost 29%, and it seems that there is a repricing in the stock. The stock is finding new buyers, massive volume, and we want to take advantage of that. We also know that Warren Buffett is still positioned in the stock, so we want to try to capture that probable reduction in loss that he is looking. And of course, he's looking to make his money back and make some money out of his position, but step by step. We also look for other metrics. We look for the yield today. The stock is sitting at a 24% loss. In a 1-year time frame, the stock is sitting at a 42%, and in a 5-year time frame, it's 55%. Now, with this information, let's jump to the charts. We're going to work also with the Hawkeye trading tools, and let's see what we have. Now, a couple things. Here we have in the roadkill, we have what we see a little bit of buying opportunities. Still, there's professional selling. We haven't seen any buying according to the Hawkeye trading volume tool. But the first thing we want to take a look is the volume profile. This is one of the tools our senior editor, Ross Givens, at the Insider Report has been recommended since the beginning of 2019. This is a tool that we use all the time. Our team of analysts, myself, we use to determine price rotation. This is key to understand. Now, I want to point here to the right. There's this absence of volume between $41, $42 all the way to $35.90. This is very important because this will give us an opportunity to expect filling the gap when it comes filling the gap in volume. Not in price, in volume to the upside. Now, we can see that there is an expectation. We have some action here, and we see buyers coming in, and there's a volume building up around this price. There's a small, very tight rotation here. And now what I want to do, I want to use Fibonacci retracement just to give me the idea how high prices may climb in the next couple weeks. Now I have the 61.8% Fibonacci, 4220. That will be my key resistance, and I do expect from the technical perspective that sellers will come back at this level. Very important to keep this in mind. That itself will give us, if we go all the way from these levels, let's see what we have. We'll be looking at, just have it here, 61.8%, a 26% return. Not bad. That should take probably, I will say, 12 to 16 weeks, and that's what I'm looking at right now. Now, for risk, I will be looking, if you want to be conservative, something around 15.70%. I like to go with a full 35% because my expectation 24 hours after I publish this video will be to start building a position, a long position in KHC. So that's, I will need, by law, I need to wait at least 24 hours before I start building my position, and we put this recommendation out. Now, once this happens, also there's an opportunity, if I were to think that the stock may push higher, we'll be looking for a 49% return. Not impossible. Probability indicates that if markets were to trade higher, make new highs between now and summer 2020, there's no reason to believe that new fresh capital wouldn't be allocated into the Kraft Heinz company. Just to keep it that in mind, okay? And now, having these levels and sharing this information, the one thing that I found is very interesting. But before I do that, I will share my levels of the S&P 500 before summer 2020 and how I see that support, and that's a critical variable in the upside that I expect in this company. Now, for the S&P 500, a couple of things I want to take a look at. We're here in the weekly chart. We can see volume profile to the right. We see the volume accumulated on both sides. We have here, for example, there's this first line. Think about this first line of support, 2,720 points. There is a gap. If prices trade lower, they will find another key level, key support at 2,660 points. We can see easily, and you can see that here just by looking at volume profile. Also, we notice we have point of control, 2,710 points. Now, you can see how markets are pushing higher. It doesn't mean that today or next week the trade talks, pretty much tariffs and trade wars between the US and China can go south, and easily this can go and retest the 50 exponential moving average on the weekly chart, gravitating around 2,770 points. Now, if it gets there, you want to apply Fibonacci retracement. You want to have an idea how far can things go, and you will be playing in the range here between the 23.3 and the 38.2. I will love to see prices get into this level, the 2,700, and then we can find a key support in the market. Now, if that's where the market is gonna rotate, then we take the full extension and we can use this to give us some guidance to the upside. And we will be looking at an upside, potential upside, from now to summer 2020 around 3,350 points. Now, there are a couple of things you may consider on the fundamental case. One, 2020 elections for Donald Trump. Second, there is a lot of speculation about how the figures, how the valuations for stocks will look once we remove from the equation 2009. We are moving into a new range of 10-year period that has to be calculated into the valuation of the stocks. So that's very important to have an idea. Also, if growth keeps slowing down in Europe, in Australia, New Zealand, and also in China, the US market will still be a very attractive position, very attractive place for foreign capital. So that's another option to consider. So you have three views in how this actually can happen in the next couple weeks, in couple months. So with this information, now I want to share with you my final findings in when it comes to opportunities trading to the long side, KHC. We found very attractive the October 2019 on the day 18, the 35 call options. Open interest 5,135, and now we look at the price rotation. Low $1, high $3.59. Last sale price $1.15. If we were to position ourselves accordingly, we're looking here simply a 200 to a 300% return in our money. This is an excellent play for those that want to speculate with options and take advantage of an opportunity, a rebound story in this company, the Kraft Heinz company. Now, of course, if you were to get it below $1, it would be even better. You can easily clock in returns yield 300%. And if the stock moves way higher, there's a stronger rebound story, stronger recovery, and we start trading around $46 to $49 range, we can easily see a 400% return on your money. Once again, here is the call option available that we think will yield the best results for speculators. The Kraft Heinz company, October 18, 2019, strike 35 call option. And finally, in the description of this video, you will find an invitation. Click at the link. So if you are ready to go and learn more about the insiders, what we do here in the Insider Report, how our senior editor Ross Givens find consistent winners and trading opportunities that so far have yield 200, 300%, 100%. Just last 4 weeks, last 6 weeks, he closed 2 trades for a total of 200 and 250% respectively, and our subscribers have enjoyed this since we started publishing the publication back in 2017. Last year, for example, he found another opportunity that delivered to our subscribers 250% in only 2 weeks. Imagine if you were to have the opportunity to experience these returns in your retirement or your long-term trading account. So the invitation, once again, make sure that you subscribe to this channel to keep receiving this information, these videos, and go to the description. In the description of this video, you'll find a link. Click on the link, and it will give you all the information you need to sign up for our next webinar. So you hear directly from Ross Givens, senior editor of the Insider Report, all the information, everything you need to know to learn and start trading following the insiders, the smartest and best traders in Wall Street today. I thank you for watching, and I wish you a great trading day.